Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with an old friend of the show, Jayant Bhandari. Jayant is a private investor, an activist investor, works with a lot of other high net worth investors in the resource space, and is always traveling the world and looking at different opportunities. And it's been a while since we've had you on the KE Report. Jayant, I had a lot of people emailing us asking, where is Jayant? I want to find out what he's up to these days. So great to connect here. And some of it's just been that Giant's been busy with a new family, but also sometimes on a different time zones situation where we couldn't connect. So very nice to connect today. And I want to get your thoughts on the commodity space because since we've talked last, we've seen gold break out to a new all-time high. We've seen silver break above 30. We saw copper break up to 5. And the animal spirits are coming back to the space. You're starting to see a little more excitement, a little more enthusiasm. What's your read on the markets these days? How are you looking at the resource space?
Shad, thanks very much for having me back again. This is a very exciting time, in my view, for the market. And the reason is that the gold price has moved up quite well, and the costs of making gold haven't really moved up all that much, which means that profits of these companies have actually expanded over the last couple of months. Now, a lot of development stage companies and junior mining companies haven't really caught on with this, which means that we are in this really good sweet spot where you can invest in the junior side of the market and expect these companies to start moving up. What is currently happening, Shad, is that there are in my view, about 10 or 12 mergers and acquisitions happening. These are the most mergers I have seen in my investment career in the mining sector. Now, when these mergers start closing and the cash starts coming back to the market, this will create a churning in the market. And I think this new cash will get reinvested in other junior mining companies, leading to an exciting phase for the junior mining space. So I'm very excited about what I see happening over the next few months. At the same time, Shad, I mean, while the mining companies have gone up, the junior mining companies have done reasonably well as well.
Yeah, nice to see that finally the juniors got a little life. Some of them have literally doubled, or even some of them have almost tripled just in this time period. And some of the ones that just haven't moved much at least have gone up double digits. So we've seen a little life in the junior sector. But thinking about that M&A and how the money will circulate around as some of these deals close and as certain investors ring the register and pull profits off of the trades, or at least exit the trades better off than they were before the deal was announced. You are really what we always call the arbitrage king. You're always looking at the spread between the company that's doing the acquiring and the company being acquired. Are you seeing any good arbitrage opportunities out there?
There are several, Shad. I can mention two for you right now, which, in my view, offer the best arbitrages. One is a company called Base Resources, ticker is BSE on Australian Stock Exchange, and it's trading for about 27, 26 cents. The arbitrage is about 22% in that company. Now, the reason the arbitrage is very good is because, from what I understand, the Aussie listing will cease to exist. And this creates a strange mentality among the current investors in the Australian Stock Exchange. They probably think that their shares, once they convert into a Canadian listed company, will not be able to be traded. So they want to sell and get out of this issue. They have already done well because the merger announcement gave them an upside already, a premium. So they're trying to get out without really worrying about the arbitrage difference they are leaving on the table. Now, I can benefit from it. If I buy my Aussie stock in a brokerage account, that also offers me a Canadian listed portfolio as well. So, for example, Interactive Brokers would be an interesting platform to have to buy ASX stocks, which automatically will convert into your Canadian listed stock, and you can benefit from that 20-25% arbitrage upside. Now, if you're worried about the acquiring company losing its share price eventually, you can actually short sell Energy Fuels' shares. Although I don't really recommend that, but you can basically book your 25% arbitrage by short selling Energy Fuels. I prefer to just buy the company being acquired and sit on it because then I don't have to pay the borrow fee, and companies can move up and down. So on average, I should actually not really lose anything by not booking the profit beforehand, before the merger is over. So that's one company I'm very excited about, particularly because it's a cross jurisdictional merger. Base Resources also trades with the same ticker BSE in London. And London is even more illiquid, which means that you can actually acquire shares of Base Resources at even lower price. So look at this company. Another company that I quite like from arbitrage perspective is Black Wolf Copper. The ticker is BWCG in Canada, and there is about 15% arbitrage based on its merger with TML, which the merger should close in another 2 months or so. There are more companies if you want me to mention those.
Well, I think it's interesting to look at both those because Energy Fuels being a uranium company that also has rare earth processing, that's why they're buying the base resources. So there's also some people in that in either camp that don't understand the other side of the business. The mineral sands people in Madagascar maybe don't understand the uranium business, and uranium people maybe don't understand the mineral sands and pulling the rare earths out of there. So I think that makes that arbitrage even wider. That's interesting to play both the London and the Australian parts of it because you can get a better arbitrage from the London shares. As far as the Black Wolf and Treasury combination, though, you also have Frank Juster in there, who's obviously an icon in the industry, and that brings a little more promotion to the company. Do you think that these kind of mergers and acquisitions in general are a sign that a lot of these other companies see that this is the time to be active? If it's a larger company taking over a smaller company, or if it's two companies merging, like a merger of equals, do you see that as being a signal that, hey, these companies believe the bottom's in and we're off to the races? Is that how you're looking at it?
Well, I don't necessarily think that is the reason. I think what is happening is that many of these junior companies are being pushed into ceasing to exist. The market is not giving them cash, and their share prices have continued to stagnate. So they are forced in a place where they have to merge with a larger entity to continue to stay alive. And that is what's currently happening with a lot of mergers that I'm seeing. And you wrote, Shad, a very nice piece on it. Argonaut is merging. Argonaut has a huge financial problem. Adventus has had problems now, and they needed to work with a larger entity. High Gold has had problems, and they needed to be in a larger system as well. So I think the junior mining companies are being forced to merge with a bigger entity. And I also think, Shad, that maybe 50 to 80% of junior mining companies, which are worthless companies, will also cease to exist over the next few years. So this is actually a pressure from the market to either merge or cease to exist.
Yeah, I think that's a great point. There actually are way too many companies, and a lot of them shouldn't exist in the first place. And so, unfortunately, in prior cycles, a lot of the companies find the way to raise capital. We always, Night of the Living Dead, they're like Frankenstein companies. They keep coming back to life, and some of them are just lifestyle companies. So, in a way, we need to see more consolidation. And yeah, great point that some of these were just cash starved and they needed a larger company with more capital. That brings up the point that a lot of companies still don't even have a work program for this year. There's a lot of companies that haven't even raised enough money to do anything meaningful. If they have raised 1 million or 2 million, that's really just lights on money for the management team. But then there are other companies that are very cashed up. They have a quality project, they have access to capital, and they're ready to do some work this year. So is it going to be a story of the haves and the have-nots?
I think it will be. There are junior mining companies, and some of them are very good, but they simply cannot raise money even in today's market. And their share prices are still at the same place where they were 2 or 3 months back. So there is really a shortage of cash in the market, particularly for the junior sector. And if they manage to raise cash, their share price has a tendency to move up very rapidly. So it all depends on how well connected you are with the capital market.
Now, some of these companies, as we've met with them at various conferences or talked to them on Zoom calls and just talked about what they're going to do this year, they're entertaining different ways, sometimes non-traditional ways. They don't want to dilute, especially if the management actually has a stake in the company. They're in the same boat with all the shareholders. They don't want to see the share count blown out. So they're looking at things like selling a non-core property, even though a year ago they said it was a very core property. Or they're looking at bringing in a strategic partner where they're giving up maybe some of the project level, they're diluting at the project level. Other companies have actually forward sold a royalty in the project, even though they're in the expiration stage. With all these different ideas of how to stay alive, are there any that you like better than the other? Is there any that you'd rather see a company do to try to get through this tough period?
Well, yes, Chad, they are all being pushed into being innovative and actually create value. The market has become very value conscious these days, and people don't want to give their monies to companies that might not create value. So, yes, there is a lot of push that these companies are facing to create value. Somehow they have to either be very innovative, and you very right correctly mentioned, I'm currently talking with a company that is actually sort of optioning out and joint venturing all their projects so that they don't have to raise a lot of money for the company. So they are being pushed into a situation where they don't have to raise too much money or simply merge with another entity and be finished with them.
Yeah, that's also interesting that some companies have become prospect generators in a way because it's like, hey, if we can't raise money, we've got good projects. Maybe we can bring in option partners and just have them. We'll split it in a kind of a JV or an option agreement. Do you like that model, or do you think that it takes away the potential gains when they finally have a discovery because now they have other people in the mix?
Well, it all depends on the valuation. So if you are optioning away 50% of your project to someone else to cover all the costs, then it might be not a bad way to do it. If you have to otherwise raise 100% of your market cap as cash to continue owning 100% of the project. So, it all depends on what kind of mathematical equation you can come up with. If you can get a better deal by optioning the project to a bigger entity, then you might be in a better place just doing it that way. Particularly in today's world where junior mining companies are not being valued as nicely as the mid level and bigger companies are. So the bigger companies can actually offer you a better value by optioning your project than by you yourself raising cash to work on your company. So, yeah, absolutely. They have to develop some innovative ideas to create value for their shareholders.
Well, you keep your eye on the sector pretty closely and you look at a lot of different companies, a lot of different transactions. Are there any companies right now that you think are set up to build value and have been building value that's not getting recognized by the market that you hold in your portfolio or that's on your close watch list?
Yeah, well, I only mention companies that I hold in my portfolio. One is Aztec Minerals. I own a lot of it. I like the management. The CEO is a go-getter. He raises money and he actually starts working on his projects right away. So I like that company very much. I like Nucor has done very well with their report. Now it has gone up quite a bit, but I think there should be still an upside in Nucor, although I wouldn't buy it at the current price. But it's a company to watch for because again, Shad, mining companies are actually paying more attention to African projects. You see what happened to this Aussie company, ORR, OreCorp, on which there was almost like a hyena kind of a fight between Silvercorp and Perseus Gold. And Montage Gold went up quite a bit, again, because the market is now giving more respect to African companies. So I think from that perspective, Nucor could be an interesting idea, particularly if the share price falls. Another company is Irving Resources. They are very close to doing a joint venture agreement with Newmont. Again, I would only buy it on weakness, but it's trading at around 45 cents. Uh, they are a good company in Japan. Yeah, so these are some of the companies.
Yeah, we like Simon quite a great deal from Aztec. He is a solid guy, solid CEO, and I like the drill targets that he's working on both projects. They have one that's more gold focused and one that's getting a little more attention for silver. And Nucor, Luke is a fantastic CEO, and they've done a great job of growing the resources. You brought up Montage there, and I think it's interesting. One of the things that happened with Montage is that you had key strategic stakeholders come in, the Lundin mining family, and that really spiked the punch bowl. And a lot of people got excited because they thought it added a layer of credibility to it. Do you think more juniors need to do something like that where they attract maybe a high profile strategic investor?
Well, again, you have to be very innovative to ensure that the market recognizes your value. If your value is not being recognized in the stock market, then you have to do something to get it recognized. Montage went up almost 100% on the back of this new management. And a time came when I decided to sell my portfolio. I decided to sell my shares of Montage. It went up far too much, far too quickly, and it actually strangely has stayed up quite nicely. So again, and Aris Mining, a company we were talking about before you started recording, also has done extremely well. They are getting recognized by the market because of the value creation that they have consistently done.
Well, I think this also ties into, like, as you were saying, people are not afraid to go to other more exotic jurisdictions, going to West Africa, looking at some of the M&A deals. Some of them have happened in South America. You brought up the OreCorp deal, where I think that was in Tanzania, where it was Silvercorp versus Perseus. And Perseus has a pretty big footprint in Africa already, but Silvercorp ended up going after Adventus Mining and going into Ecuador. So you're seeing some of these companies move into jurisdictions that most people wouldn't put on their tier one list, but that just goes to show that there seems to be more of an appetite from the company level and from the investor level to look at different jurisdictions. How do you view jurisdiction risk?
Well, I was actually very shocked by Silvercorp's news release to acquire Adventus. This is a completely new jurisdiction for them. There's no way they understand how Ecuador works, so they have to retain probably whole of the team of Adventus. But again, it was a very strange move that they moved into a completely new jurisdiction.
Well, I've been a Silvercorp investor for years, in full disclosure, and they have been trying to get into South America for a while. They tried to buy Guyana Goldfields, but they were outbid there too. So Silvercorp has this weird curse where they go in to make a bid and then some other company outbids them. I think Zijing outbid them on Guyana Goldfields, but they also spent some time in Guyana during that process and decided to put a strategic stake in Omai Gold Mines, who has 4 million ounces of gold in Guyana. And so they also have New Pacific Metals that they incubated, which is in Bolivia. So they've been trying to get not just in China, but also something in South America. So it didn't surprise me that they went there, but it did surprise me they went to Ecuador. And it did surprise me that they picked a completely new jurisdiction they hadn't already been working in. Do you think it's a good idea for companies that have perceived jurisdiction risk to try to mitigate that by going into a new jurisdiction, or could that be a double-edged sword?
Well, and just before they went for Adventus, they tried to acquire Celsius Resources as well, which has a project in the Philippines. So they have been trying their hands on different jurisdictions. And again, you correctly said they have been cursed in a way that several of the companies that they tried to acquire did not go through. I am always skeptical of a company trying to go into a jurisdiction they don't really understand or don't have an experience of. So let's see how it works out. You correctly mentioned that New Pacific has been working in Bolivia. So maybe the company itself has competencies to deal with issues in Ecuador, because Bolivia is really the worst jurisdiction in South America. So we will see how it all works out. But I would be very cautious about my investments in Ecuador and Bolivia, of course. I mean, remember, Bolivia taxes you about 80 to 85% on your profit. You have to be very careful about investing in that country.
Yeah, and I think we covered some of this when we were doing the jurisdiction risk. We did a couple episodes with you back to back where we went around the world to different areas. But I will say Bolivia has moved up the food chain as far as there's more companies operating there now. There's about a half dozen companies now exploring, and even one or two that are actually producing there now, especially on the silver, lead, zinc, and tin side of the business. So we'll see how it goes. But any final thoughts you want to leave people with that are listening in, just as far as how you would be managing things in this environment?
So, a couple of companies that I should have mentioned to you earlier are O3 Mining and Stellar Gold. Now, I don't own Stellar Gold, but O3 Mining has continued to stagnate for now, I would say 2 or 3 years. And this company, in my view, has the potential. Maybe I'm not getting something, but these development stage companies, which are relatively low grade, but actually offer value in the current gold price environment, might show an explosive change in their share prices over the next few months if everything stays where they are. So I would certainly give some attention to development stage companies that haven't moved up over the last couple of months.
All right. Well, that's another consideration to look at as a lot of these development stage companies have ounces in the ground that some of them have massed up, like Stellar was the combination of Moneta and Nighthawk into a larger company. So they've got bigger resources. Surely that puts them on the radar of more companies looking at them maybe as a potential M&A candidate or just more investors seeing that those ounces in the ground should be weighted higher. Well, great thoughts, Giant. It was awesome having you back on the show again. And we'll put a link to your show that you're doing down in the show notes because you are doing your anarcho-capitalist event again in Vancouver. So we'll put a link to that for investors to check out. And don't be a stranger, man. Let's get you back on the show more often. We'll connect with you and keep us posted. And if people want to follow Giant, I'll also put a link to his social media page where he's somewhat active. And looking forward to our next conversation, Giant.
Thank you very much for the opportunity, Shad.